Hey guys, hope everything's going well. You guys know the drill. Smash the like button, subscribe if you haven't, and comment down below. Alrighty, today is going to be a return to a topic on sports cards, and also I'll talk about collectibles and more of an economic concept. I think this is a very important concept because a lot of people talk about investing in sports cards, but they miss one important concept. And once again, it is regarding interest rates, but it needs to be talked about. And since no one's talking about it, I'm going to talk about it. So, this is a chart of real interest rates from 1965 to 2005. And long story short, real interest rates accounts for the inflation. So, if it's more positive, like this is 6%, that's showing that that's the interest rate accounting for all of the inflation. If it's negative 3%, that's showing that inflation is big, is out of control. And right before 1975, the interest rates were what, negative. And if you look at this is the furniture purchasing index, I believe, and this was pretty much in line with the collectibles industry. And if you see in right before 1975, the index had huge returns. So what am I trying to say here? When you have negative rates like you did over here, right? That's actually very good for the sports card market. And obviously the trend always, goes back in the other direction. You saw a huge crash in the 1970s, but then the collectibles market continued to go higher after a recession. And what sophisticated investors do, I may have talked about in a different video, is when the interest rates are negative, they go into collectibles because they believe that it's going to hold much more value than a different type of assets. You could go into stocks, but collectibles tend to do better in times of crazy inflation, like in the 1970s. And I wanted to look at another way of potentially looking at inflation. But this is a bit more complex for those that don't follow economics, but it needs to be talked about. Okay, so this here is basically showing TIPS, Treasury Inflation Protected Securities. And the yield that they use, for instance, this is the 5-year yield. So they take the 5-year Treasury yield and they subtract it from the actual inflation rate that Wall Street says it is. And the thing is, if you see it negative here, that means that this is more like of a negative interest rate. And if you see it over here in the positive category, that's more of a positive interest rate. And this graph here is from 2006 to 2020. I don't want to be too confusing here. I know some people may be like, what the hell does this have to do with sports cards and collectibles? Just hear me out. So look at this graph in 2018. I was buying sports cards here. This was where you had the 5-year yield was greater than the inflation rate. So this is more like of a positive interest rate environment. And the stock market was going down here too. If you had bought sports cards here when the TIPS yield was, positive, you would have done very well. And the other time where it was positive, it got almost positive in 2020. It was actually a little negative, but still, you notice around here, this was a good buying opportunity. And if you want to look at sports cards, not sports cards, if you want to look at time where it was really positive, it was in 2009, okay? Look at how positive interest rates we had at that time. If people had aggressively bought at this moment, I wish I did, but I just graduated at that time, so I didn't have that much money to invest in. And if you look at in the past few years, over here, 2018 or 2015, they were starting to raise interest rates from my understanding at that time. But let's go back to 2018. Everything was dirt cheap in 2018 sports cards wise. If you had just bought here, that would have been good. Now, fast forward to where we are today. We have what's called negative interest rates, like I said, where the 5-year yield is what? 0.92, and the inflation rate that they're saying is what? 2.45? I don't believe those numbers, but let's use what they're giving us. So you have negative rates here. So I'm looking at the behavior of people where you have negative rates, where you see a lot of people in the last, 6 to 9 months being very, very aggressive. Well, if you look at the data, you should probably have been more aggressive over here buying sports cards, buying collectibles. Just like you should have been more aggressive buying sports cards and collectibles over here. Okay? So, in my opinion, even though we have inflation right now, we have negative rates, in my opinion, this thing is going to come back up in the next few years. Maybe when the Federal Reserve raises rates, maybe when oil prices go down, maybe when the stock market goes down. I don't know. I'm looking at it 2 years. You see this line go back up. And what my thinking is that people are going to probably do the wrong thing. They're doing the wrong thing right now, in my opinion. They are being very aggressive right now, right? A lot of people are getting back into sports cards. Negative rates, right? And if this line goes up the next few years, sports cards will probably go lower. Stock market goes down. Positive interest rates. We have a short-term deflationary environment. So what I want to do, I want to start buying once this rate becomes negative to a positive. And if we don't get the positive, I want this line to still go up. And that's where I'm going to buy. Like last year, it almost got the positive. So the thing is, I always like doing things opposite of other people. And I've noticed that a lot of content creators and also people commenting on YouTube got very aggressive. So what I want to do is I want to look at when fear is totally out of control and where people are just crazy, liquidating their accounts, just like in 2008, 2009. I saw a comment about some owner saying a lot of dealers were doing that. And I want to buy fear. I want to sell greed. And right now, you could say it's a little bit fearful right now. That is true. But the thing is, we still have negative real interest rates. So I expect, even though the market has gone down because things have opened back up and people have taken the jab, so things are somewhat getting back to normal, I expect card values to have a bounce later this summer, probably after the National, when Gary Vee goes on his YouTube channel saying, look, I bought 5 Michael Jordan PSA 10s, Fleer 86s, or whatever. He's going to do something like that, in my opinion. He'll find a way to get these cards in hand. And people will be like, oh man, Gary Vee's back in action. And, you see a rise up in sports card. But my fear is over the next, 2 years, like I said, this line's going to go back up. Less inflation than what people are saying right now. Interest rates slowly going up. Card market gets battered. Right? And we have positive interest rates. And like I told you, positive interest rates, in the early 80s, sports cards, furniture prices, they went down. And, you could see the same thing here. You see from 94 onwards, right? You saw interest rates going back up. And when you saw those interest rates go back up, that's when the card market collapsed. The bubble, the first bubble, the junk wax era. So this junk slab era, it will go down. And a lot of people will be like, hey, it's because of the supply coming back from PSA. A lot of Monday more in quarterbacking. They're going to be like, hey, all this supply is coming back from PSA. Oh, yeah, the stock market went down. That's why everything's coming down. So this is one thing that's important to look at. I know some people will be like, man, this is economic stuff. This is boring stuff. But if you're involved in the collectibles game and you're investing and you're aggressive, you got to understand interest rates. You got to understand positive and negative real interest rates. And if you don't, you may be totally blindsided. You may be slapped in the face in the coming few years. And you may start blaming your content creators. But no, it's not to blame these content creators that didn't know this stuff. It's just not knowing, unfortunately, basic economics. And like I said, I'm probably going to be buying at that moment when there's so much fear. I want to buy fear. I want to buy low and I want to sell high. And I've been slowly but steadily selling selling the last few months. I've been buying since winter of 2018. So that's what I'm looking at, guys. I know some people will be like, this is nonsense. I could be wrong, but I'm just looking years and years of data. And right now we're in a negative real interest rate environment. You turn into a positive real interest rate environment, this whole house of cards goes down. And even from a collecting standpoint, this is good to know because you could probably get some of your graded cards at a cheaper price. You could buy some of the cards that you want to invest in at a cheaper price. And in the short term, I do expect to bounce, like I said, in end of July. But for me, my risk tolerance, I don't want to be aggressively buying unless I find a huge discount in the coming months. Anyways, guys, let me know what you think. Smash the like button. Subscribe if you haven't. Comment down below, guys. Thanks. Bye.